I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Nick is the Director of Growth at Passiv, a startup in the tech space that produces a piece of software that allows investors who use it to recalibrate and balance their portfolios at the click of a button. If you're the kind of person who prefers a more passive approach to trading, either now or in the future, stick around to hear Nick give you the highlights of what Passiv can do to make that easy for you. Hey Nick, how's it going? Hey Nick, welcome to the show.
Not bad. Thanks for having me on, Nicholas.
Yeah, sure. Good. So, you're not a typical trader, the kind of person I normally talk to on the podcast. You set up a software, Passiv, which turns your brokerage account into a modern portfolio management tool, I think is how your website describes it. Talk us through what that does. I mean, I got some of it, but I think it needs you to explain, certainly to me, and I'm sure to people listening. But yeah, I'm intrigued.
I think the best way to understand what Passiv does is by first understanding the problem that we're trying to solve here. So Passiv is a tool that allows people to automate the management of their portfolio. And if you think about how a lot of investors do that, they decide what they want to be invested in, and they decide what allocations they want to give to each of those investments. And once that's done, they need to use something like a spreadsheet or some kind of calculator to figure out what they need to invest in over time to stay as close as possible to that target allocation. So if you go back a little bit of time in history, Passiv was actually created, at least the initial prototype of Passiv, because one of our co-founders was managing his retirement account, and he was managing his spouse's retirement account, and he was managing a couple of investment accounts for his kids' education as well. For all of those accounts, he had targets that he wanted those accounts to be invested in. He wanted them to be, this percent in one fund and that percent in another fund. So he kept track of all of this in a spreadsheet. Now, spreadsheets are great for automating this kind of data-intensive task, but they also have downsides in this case. And specifically, the downside to using spreadsheets to do portfolio management is that it's not integrated with your portfolio management brokerage in any way. So even though the spreadsheets could tell you what you need to buy and what you need to sell to stay as close as possible to your asset allocation or your target asset allocation, you still have to go to your brokerage account and manually enter in all of those trades. So that becomes very time consuming, very janky, and it's just like not a good experience. So what our co-founder Brendan did was he actually wrote a little Python script that connected directly to his brokerage account. It read in what was in his account, and it compared those holdings to what his target portfolio was and told him what he needed to buy or sell. So that was kind of the initial prototype of Passiv. Now, after many years of development and lots of kind of elbow grease by the team, Passiv is really what we think, hopefully the best place for you to manage your portfolio in terms of ease of use and simplicity. So the way Passiv works today is you log in, you create a Passiv account, and then you pair your Passiv account to your brokerage account using a direct integration that we have with brokerages. Once that's done, Passiv allows you to set a target portfolio, and then Passiv does all of the sophisticated calculations to determine what trades you need to make to be invested directly in that target portfolio. So it'll tell you exactly what you need to buy and sell. Now, here's where Passiv kind of gets really useful. Instead of just telling you what to buy and sell, Passiv allows you to actually rebalance your portfolio using a one-click trade. So it presents a list of buys and sells that you need to do. And then once you hit confirm, Passiv will send those trades to your brokerage and actually execute them so that you get directly invested in your target portfolio. That's kind of an explanation of the core features of Passiv. We have lots of other more advanced features that we'll talk, I guess, about later. But I thought I'd kind of just pause here to see if you have any questions and if that makes sense to you.
Yeah, I mean, some of it does. It sort of sounds also a bit general. So if I'm your investor, I maybe not even an experienced investor, and I say, well, I've got, let's say, just for argument's sake, $10,000, and I want to invest that or trade it. Maybe I don't know enough to know how to allocate that money in a sensible ratio between, I don't know, commodities, ETFs, even Forex. So what does Passiv do? Anything to kind of help you divide it up, if you like, what you're going to invest in with that 10,000, for example?
Passive doesn't actually provide investment advice, but what we do instead is we provide tools to help you manage your portfolio once you've determined what you want to be invested in. So, what many of our users will do is they will go to an outside resource that provides model portfolios or something like that. They will pick one that they like, and then they will use Passive to actually implement the portfolio management of those model portfolios.
Oh, okay. Right. Yeah. So it's definitely much more a sort of management tool once you've already made a decision on the kinds of trades you want to make, right?
Absolutely.
Okay. Yeah. And do you trade yourself using this tool?
Yeah. So I'm a big believer that if you're going to be building a company and trying to build products that people use and love, then you have to be one of the first users of it yourself. And that's the only way to really, understand the pain points of the product. So when I joined the Passive team, I kind of slowly started moving all my investments over to the Passive platform. And for me, it actually does save me a ton of time. And I'm really happy with how it allows me to, save time and just kind of make sure my portfolio is on track for long-term financial success.
So how does it work? Does it kind of respond to all the data that's coming in about, I don't know, stocks, ETFs, and so on?
Yeah, the main way that passive works is that it compares what's in your portfolio to what is in your target portfolio. And your target portfolio is just like a mix of stocks, bonds, ETFs that you want to own in your portfolio, along with the associated weights of each of those securities. So, to provide a really basic example, one potential model portfolio that a user might use is 50% invested in Apple stock and 50% invested in Tesla stock. Now, what passive allows them to do is whenever their portfolio deviates from that, they can log in and rebalance to that 50-50 allocation with one click. We also provide email monitoring. So let's say you got invested in that 50-50 Apple Tesla model portfolio and Apple goes up, Tesla goes down, suddenly you're at 60-40. Passive would send you an email notification notifying you that your portfolio has drifted so that you can log in and rebalance with one click.
Okay. Yeah, that makes more sense. Yeah, cool. And did you come to passive through the software route, i.e., that's your expertise, and then use it and learn to trade, or were you a trader as at the same time, as you were building this?
So I worked in professional investment management, I guess, my entire career. My first job was at a large mutual fund provider over here in Canada. And then I worked for a fundamental kind of bottoms up investment research firm down in Houston, Texas. So I've always been into, I guess, especially the equities markets. It's kind of been very, topical for me in terms of what I've been working on. And then uh, I would say separately, when I was in college, I got really good advice from a professor who said that if you're going to be successful in like today's modern competitive labor force, gone are the days in which you could be really successful by being good at simply one thing. The people who are going to make, amazing careers for themselves and do well for themselves now are people who are going to thrive at the intersection of two fields. So for me, I thought, I always was working in finance and I was always passionate about technology. So if I could teach myself some software development and kind of operate at the intersection of finance and software development, that would be kind of like my niche. So when I kind of had the opportunity to join the passive team, it was a really good fit from that perspective, if that makes sense.
Yeah, no, it does. Yeah, totally cool. And what kind of software do you use or code? I mean, you mentioned Python. Are you sort of fluent with these kinds of languages?
Python is definitely the programming language that I'm the most competent in. And if anyone who listens to this is kind of thinking about learning to code, especially for financial applications, I think Python is definitely the most useful language if you work in finance. If you want to be like a web developer and design websites or sophisticated web applications, you're probably better off learning JavaScript just because it's a more prevalent language. There's a lot of big frameworks like React.js and other things that
Yeah.
use JavaScript. But I would say if you want to be a true full stack developer, you kind of need to learn like one backend programming language for databases, which for us at Passive, that would be Python, and then one front end programming language, which is basically always JavaScript. So if you compare JavaScript with a big database language like Python or Rails, maybe, which is a Ruby framework, Ruby on Rails is the full name. If you compare Python with one of those, I think you're set up for a lot of long term success as a software developer.
Okay. And why does the financial sector lean toward Python?
That's a good question. I mean, yeah, so
Yeah.
Python just has a lot of like the best libraries for doing financial software development. So to provide a few examples, there's a really well known Python library that's kind of used primarily for data science. It's called Pandas. it's a portmanteau that kind of combines the words panel and data. So if you think of panel data, basically it just means like tabular data, like an Excel spreadsheet. So Pandas provides a lot of amazing built-in functionality for you to interact with tabular data in Python, which for financial people, a lot of the work they do is in spreadsheets, and Pandas allows you to kind of take a lot of that logic out of an Excel spreadsheet and put it in a better performing Python script. So I would just say, in terms of why Python's so well used in finance, is because it has a lot of the best frameworks. And now that the best frameworks exist in Python, a lot of the best financial programmers learn Python, and it's kind of like a flywheel effect where it's the best now, and I think it'll probably continue to be the best because the best people get drawn to using it, if that makes sense.
Okay, yeah. So you learnt code and software development pretty much along with the financial learning that you went through at college. Is that right?
Yeah, when I was in college, I originally went in to study biology, which was interesting because
Okay.
I didn't actually have too much built-in demand for that, like naturally. But my father is a physician, and he kind of thought, a lot of the smart people in the world should go and be doctors. And I don't think he's wrong on that. But it only took me a few months of being in a biology program to kind of learn that I didn't really love learning about like plants and mammals. And I don't know, the human body I think is like mildly interesting, but plant physiology was never something I was super passionate about. So I went to my academic advisor and I said, listen, I'm having a hard time here. I don't really like the coursework. Is there anything that I could do to like switch my program and still graduate in 4 years? Because I don't want to have to like spend any extra time here if I don't have to.
Yeah. Yeah.
So she basically said, have you ever considered doing like a math degree? So I said, no. And she's like, well, maybe you should, because it's basically the only thing we can switch you into given your courses that will allow you to still graduate on time. So I said, all right, let's give it a try. So it turns out I always liked math, and the program was really interesting, and that was a really good switch for me. And then a lot of the interesting math internships tend to be in finance. So I went out and started working in finance after college, or I guess in between summers and after college as well. And then once I got out into the workforce, I saw the importance of being able to automate things using software. So that's kind of how I started teaching myself how to code. And my employer at the time was really generous in terms of putting me through courses and sponsoring like education opportunities for me to learn and develop that skill because he knew it would be valuable for us. So I picked it up along the way, but definitely with lots of help from my employer.
Yeah. How long did it take you before you became, fairly competent at using Python, for example?
I was really lucky in that, before I joined Passiv, I had a really strong relationship with one of the co-founders of the company, Brendan Wood, and he mentored me a lot in terms of what I should be focusing my energy on in terms of learning. So I would say I kind of got up to speed and became productive as a developer maybe after 6 months. But that was largely because I had a mentor who was willing to help me understand what it is I should be learning. I think a really common problem when people go out and try to teach themselves how to code is that there's like information overload. They're not sure where to start, and they're not sure like what skills are most valuable, what programming language they should learn, what frameworks to focus on. So having a mentor for that was really, really useful, and kind of, I think, allowed me to get up to speed quicker than most people do.
Yeah. And you're based in Canada, right?
So I grew up in Eastern Canada in a small town called Sussex, New Brunswick. It's got about 5,000 people in it. We like to joke that there's more cows than there are humans in that town. It's a small
Yeah.
agriculture community.
Yeah. Okay.
And now I've moved to a slightly less small town called Fredericton, which has about 100,000 people in it. And that's where Passiv is based. And that's where I call home.
Yeah. Okay. And how long have you been with Passive?
I joined the team in December 2019.
Okay. Yeah. So quite a short time so far. Yeah. Mm.
Yeah, I mean, in some ways, it seems like it's just gone by in the blink of an eye, but time flies when you're having fun, I guess.
Yeah. That's fair enough. Yeah. Yeah. So talk to me about some of the things that Passive does really well, in terms of the kinds of investments. Is there some area that you find that we can maybe drill down a little bit to what the software does? You gave us a broad sort of picture. Can you drill down to give us one or two examples of how it's really effective?
Absolutely. Maybe the best way for us to do this is I can just give you like three potential examples of like example users who use Passiv and what they use it for. Do you think that would be helpful?
Yeah, that's good.
We'll go from like, I guess, the most simple to the most complex. So at the most simple end, Passiv has like pretty good cash management capabilities. So if you want to make sure that you keep a certain amount of cash in your brokerage account, Passiv is really good for that. So in the first example, let's say we have an investor and he just wants to be invested in the S&P 500 index ETF. So that's like the ticker SPY, and I think it's the biggest index or the biggest ETF in the world. So lots of people invested in that. This investor wants to go all in on that, and he wants to use Passiv to make sure that whenever cash hits his account, he gets notified by email so that he can log in and invest that into more shares of that ETF. So that's kind of one use case. You can use Passiv to make sure that whenever cash hits your account, you get notified so that you can log in and actually get it invested instead of having it sit idly on the side. Does that make sense?
Yep, absolutely.
Okay, so then let's talk about a slightly more sophisticated investor. He's also just like an ETF index fund investor, but he has multiple different ETFs because he wants to invest in a highly customized ETF portfolio that kind of allows him to express his economic views, but still without having to go through the cost of investing in like a financial advisor or more high cost solution. So this investor, let's say he has 10 ETFs and he just wants to be invested 10% into each of those ETFs, I mean.
Yep.
Passiv would allow him to make sure that all of those ETFs kind of stay around that 10% band. And whenever his portfolio drifts too much from those targets, he would get emails prompting him to log in and rebalance with one click. Now, Passiv is very customizable in terms of how you want to do your rebalancing and what kind of notifications you want to receive. So there's lots that this investor would have to consider. One aspect that's important to keep in mind is whether he wants to allow selling to rebalance. So as you know, the more you transact in your brokerage account, the more fees you incur. And fees are kind of a necessary part of running a brokerage business. But to the extent possible, it's good for investors to try to minimize fees. So by default, Passiv turns off selling to rebalance. So if you have holdings and some of them go up and some of them go down, by default, Passiv will not sell your winners so that you can buy more of your losers. But that's a setting that you can configure. So you can turn that off and can say, I want to allow selling to rebalance. So that's just one example of a few different levers that investor would have to customize in his Passiv dashboard to make sure that our software is helping him manage his portfolio exactly the way that he wants to. Does that make sense?
Yeah, it does. Yeah.
Yeah. So this investor, let's say he's like a retired, executive or something with lots of money, and he has multiple different brokerage accounts at multiple different places. So he might have, one account at TD Ameritrade and one account at Interactive Brokers and one account at Questrade, and he wants to manage those all from one centralized dashboard. So that's a really kind of unique problem. And if you want to manage different investments at different places, typically what you would have to do is log into each place one by one and do like your portfolio management kind of like on a disjointed basis. You would manage your TD Ameritrade stuff, and then you would log out and log into Interactive Brokers and manage that stuff. And then you would log out and log into maybe Questrade and manage your stuff there. So that's kind of a problem, and it's not the most seamless experience. And then separately, let's say this investor wants to do a really sophisticated direct indexing strategy where he wants to own like the S&P 500, but instead of owning the index ETF, he actually wants to own all the stocks within the ETF directly because maybe there's tax advantages there, or maybe he wants to make small changes to the way the index is construed. Like he wants to, take out certain stocks or do things like that. So lots to consider in that. And here's how Passiv would help him. First of all, Passiv allows you to connect to multiple different brokerage accounts. So if you have investments at different custodians, like I mentioned, Passiv would provide you one seamless dashboard where you could manage them all in one place. So that's great. Passiv also allows you to have really robust direct indexing capabilities. So you could create a really sophisticated model portfolio with 500 constituents for all of the S&P 500 stocks. And then Passiv would allow you to rebalance to that model portfolio with one click. So even though that model portfolio is a lot more complicated than some of the other examples I've given on this call, the one-click trade capability still allows you to do all of your rebalancing with one click.
Okay, yeah. Do you have a typical customer?
Yeah, some high-level stats. A lot of our customers are pretty, just like our name implies, Passiv is was originally thought of as a tool for passive investors, but in our experience, we help people from all walks of life. So we have some very active investors, we have traders, we have, ETF guys, we have individual stock guys, we have tech investors, we have energy investors, people from all walks of life. But just to provide some high-level stats, our typical investors are invested generally in passive ETFs, and they just use Passiv as a tool to make sure that their cash gets invested promptly and that their portfolio stays kind of reasonably close to what is a sensible long-term asset allocation for them.
Tell me more about what you do day to day. What's the sort of typical day look like these days?
Yeah, I mean, in the startup world, there's almost no such thing as a typical day. But so I'm the director of growth at Passiv. My broad mandate is to just work on projects that help us grow our product and grow our audience, so that we can kind of always do our best job of making DIY investing or self-directed investing accessible to everyone. So on a typical day, I might be working on, marketing things. I might be connecting with people like you to share more information about our product. I also do my fair share of software development. So we're always looking to get integrated with new platforms that have open APIs. And basically, what an open API means is the brokerage firm kind of has a software capability for other software providers to integrate with them. So lots of brokerages have open APIs, but still not as many as we'd hope have open APIs because we think that brokers who don't have open APIs are kind of doing a disservice to their clients because it really puts up a wall between their clients and new innovative solutions that might be coming to market like Passive. So um, we're always looking to work with more brokerages with open APIs. So I've done a fair bit of brokerage API integration so that we can get on new platforms, and I would say a lot of the majority of my time is spent on marketing projects.
Are you all based around the same sort of area? I mean, I know you live where you are. Is that kind of like the office when you do have an office to go to? Is that just nearby?
So we do have an office. It's got kind of like our core 7 employees in it, and then we have a few remote employees as well. But my office is like just really close to where I live, which is great. I have about a 5 minute commute, which is kind of a perk of living in a small town, I think. It's also our office is kind of right in the downtown area of my town. So even though the commute is small, I still get the benefit of working downtown. I can, walk to get some Starbucks when I want to. Our office atmosphere is really awesome. Our team is really strong, and with the way that the coronavirus pandemic has impacted everyone's working situations, I think a lot of people think that there's going to be a significant transition to remote work. But from my experience working in an office, I think that it provides a lot of benefits that are hard to replicate from a work from home experience, I would say.
Yeah, especially in a kind of entrepreneurial environment, I would say, startup kind of size. I think there's still that kind of energy and passion that is sometimes not there in the bigger firms. That's my
Absolutely.
experience.
I mean,
Yeah.
one day in a startup world is almost like 5 days in corporate America or something. With things changing so fast and so much going on in our small little startup, it can be if you're at home and the rest of the employees are working in the office, it can be hard sometimes to stay in the loop just because things change so fast. So having a really tight knit group working together, kind of in the trenches in the office, provides a lot of value, I think.
Slight switch here. What do you trade? The markets have changed so much, haven't they, in the last few months? Even since Biden got in, it's all the talk is now about renewable energy and EV cars and all the rest of it. What sorts of trading what kind of trading do you do? Is it more stock still, like you mentioned?
Yeah, so I have, back when I was doing my fundamental equity research days, I had kind of like all of my net worth basically invested in like individual stocks. So that was great for what I was doing at the time. But now that I'm more focused on like building software, I don't have as much time to follow the markets. So I have moved like the majority of my investments over to like passive ETFs. I do still have a huge passion for the markets, and I think it's something I'll still continue to be involved in like for the rest of my life. So what I'm doing now is I kind of have like a core and explore model set up where most of my net worth is in passive funds, and I'll kind of just like try to put that away and let that compound for the long term. But then I still have like some what you could call fun money where I want to pick individual stocks and kind of see what I can do in terms of trying to beat the market. So historically, I would say I don't really have like a group or like an asset class or something like that I tend to trade in. Instead, what I try to do is I've tried to like dial into specific companies or specific like subsectors or industries that I feel like I have a bit of knowledge about. So being a software developer, software and technology is kind of one of those, I would say. I've also been a long time follower of Warren Buffett's Berkshire Hathaway. I've read all of his shareholder letters, big fan of kind of the level of corporate growth they've had and just the culture that he's tried to build at that company. So all of the trading that I do now, I would say, is kind of focused on trying to predict like the future of Berkshire Hathaway. I still read all of their quarterly filings and try to stay up to date on that company as much as possible and express my economic views on that company through equity long short positions. I guess I've never shorted them, but through a long position in Berkshire Hathaway that I kind of I'll trim some off when the stock gets rich and take some buy some more when the stock gets cheap. So that's kind of a position I'm always trading up and down. And then in terms of technology, I have pretty strong views on a few different technology stocks that I try to express through options or equity positions.
Okay. For example?
Well, I would say like a couple big examples are all of the major like cloud computing players. So if you look back over the last 20 years, I think one of the biggest shifts in the corporate world is the trend from companies actually racking their own servers within data centers that they own versus renting those data centers from a company like Amazon or specifically the subsidiary Amazon Web Services. And you have to pay this monthly bill to Amazon once that's set up, but they have all of these benefits, like they guarantee you uptime, and they have like security around their data centers. There's better infrastructure. They have generators in case the power goes out. So I would say cloud computing for most companies that are trying to launch web services is simultaneously cheaper and better, because I think you can get, for $100 a month from Amazon Web Services, you can get a lot of services that might have cost you $1 million in servers 20 years ago. So I just think the transition to cloud computing has only started, and I have really,
Yeah.
a positive outlook on all the major players in that space. So if you just go down like the market share pie chart, definitely the leader in that space and the pioneer would be Amazon Web Services, followed by Microsoft Azure, and then followed by Google Cloud Platform.
Do you look at any of the sort of smaller or mid cap stocks in that area?
I would love to spend more time studying like small and mid cap technology stocks, especially stocks who kind of follow the software as a service business model. I mean, we've seen amazing things happen from stocks like Zoom or Slack, or even like some more mega caps like Salesforce, because they basically build this amazing recurring revenue base, and then they use the profits from that recurring revenue to do more marketing and just continue to build that base over time. And man, some of these technology companies, they have such amazing network effects. So, as just to provide a quick example, Salesforce, if anyone's ever used it, like the user interface for Salesforce, I think kind of universally sucks. Most people who use Salesforce agree that it's like pretty hard to use. But here's the thing: a sophisticated CRM like that, it takes so much time to learn it and to understand how it's used and how to get good at using it to track your outreach. That if someone who's a competitor to Salesforce could come up to you and say, we'll give you our CRM instead of Salesforce for half the price, and you probably still won't switch because the switching costs are so darn high and you have to relearn a whole platform. So some of these technology businesses are just so sticky that it's hard to imagine, them having, like, it's hard
Yeah,
to imagine their growth slowing in any significant way.
decoupling and trying something new. Yeah, exactly. Yeah,
Yeah.
yeah. Good. So, how's your next few weeks looking? Are you? I guess you're still at home. Are you? How bad is it out there? We're recording sort of middle of January for people listening. It might have eased up by the time this is out, but looks like we're in for a rough time for at least a month or two. Is it still like that up in Canada?
Yeah, so we're in Eastern Canada in a province called New Brunswick, just for some context. And if anyone's unfamiliar with New Brunswick, it's a really rural province. So like our largest town would have maybe 100,000 people in it, and the whole province probably only has 700,000 people in it. So our population density is really low. We're not a very populous place, so that kind of provides a natural like tailwind that helps us kind of avoid the pandemic spirality a little bit.
Yeah, it's interesting, isn't it? How we have this kind of disconnect between what's going on socially and the virus and so on, and then what's going on in the stock market, where you'd almost think that we're all having a happy time of it. Obviously it's been volatile, but getting away from it, the indexes and indices and all the rest of it have been going up and seem to be going up even quicker. What do you make of that? Do you think it is headed for an early period of retracement in the year?
Well, it's kind of interesting that you say that, because I think what's really missing in all of those indices that you talked about is like a small business index. So if you look at the S&P 500, it has obviously surged over the last year, other than the hiccups last spring or last summer. But that's only the 500 biggest companies in the United States, right? So it's not really
Yeah,
completely representative of what's happening in the entire economy. I think just the way that the coronavirus pandemic has been really hard on small businesses, and they don't really have like the cash reserves to shut down for long periods of time. And a lot of those businesses are highly local in nature, so they rely on their local communities to generate their revenue and their profits. So the large businesses in the United States are doing fine. That's great. But I think if we were to somehow measure the impact to small businesses, if there was like a small business equivalent of the S&P 500, like I would not be surprised to see that down 50% or 75%, because I think the Spark Notes summary of what the coronavirus pandemic has done to business is that the big got bigger, but the small got dead.
yeah, yeah. It's very true. I mean, it's a bit like a war, where a war will, albeit very punishing for all countries involved. It sort of accelerates a certain kind of development, doesn't it? Like the Second World War, out of that came all sorts of new technology and so on. It seems that because we're under this pressure, we've had to work so much harder on, say, vaccines. So biotech and so on has ramped up, and the online world, cloud, because we have to rely on cloud, we have to rely on the internet. So that has put more effort and time and money into those areas of life. But of course, as you say, the average local businessman is not necessarily needing all those things like cloud and what have you. So yeah, if this pandemic carries on that much longer, some of those are going to fall by the wayside. But I guess these companies that are investing heavily in the online world and cloud and so on, they will possibly accelerate faster than they were moving, before the pandemic. Any thoughts on that?
Yeah, I mean, it's like I said. The coronavirus pandemic's been tough on every business. Like, make no mistakes. But what that's really done is, I think, force a lot of businesses to really try to cut costs and implement more technology into their businesses. So we saw, the company Zoom, which makes video conferencing software. That company, took off like a rocket as soon as the coronavirus pandemic happened. And I think it was shortly after their IPO as well. So like all of those employees are going to be, anyone who is a shareholder is going to be very well off. And then separately, lots of companies are just looking for efficiencies all around. And who are the biggest providers of efficiencies to the average business? It's your companies like Microsoft, it's your companies like Google. So those companies are such heavily weighted in the S&P 500 that tailwind is going to reflect across the entire index.
Yeah, for sure. What ETFs do you favor at the moment? What's your top three, for example?
Yeah, so my personal portfolio is, I have a pretty, I would say I have a pretty optimistic view of emerging markets, and it's something that I don't have any exposure to through like most of my investments. So lately, I've been trying to invest more in emerging markets, and it's kind of hard to do that without actually opening a brokerage account in, say, India or China or another international country. So right now, I've been kind of trying to invest in these two emerging markets ETFs that are provided by Vanguard and BlackRock. So one of them is just the BlackRock Canada iShares Core Emerging Markets ETF. It's the ticker XAW. And the other one is the Vanguard FTSE Emerging Markets All Cap ETF. So that's VEE. That's the ticker for that one. And I don't know. I just look internationally, and if you look at all these companies that are in India or China or Vietnam or any of these kind of international high GDP growth countries, they have such little technology compared to what we have now in the United States, Canada, Europe, that I can only imagine what kind of explosive growth they're going to get as we start to get more internet access over there, more technology. And I'm just really optimistic on emerging markets. It's something that I haven't really had too much exposure to in other parts of my portfolio. So those two ETFs, I think, are kind of an interesting mention because of that.
Yeah, interesting. Have they got off to a good start this year?
Yeah, they've been doing pretty well for me. I've just been kind of dollar cost averaging by taking some money off each paycheck and kind of socking it in. Like I said, a lot of my investments are kind of on autopilot at this point. But yeah, those are kind of two interesting opportunities. Separately, I don't own these ETFs or recommend them. And just to be really clear, none of this is financial
investing
anyway. But,
that's just what you're doing. Yeah.
So, but one other company that I find extremely interesting is ARK Invest. Are you familiar with them?
ARK, yeah, the ETF, yeah.
Yeah, so
they've been going up like almost like Zoom.
Yeah, they're run by an amazing entrepreneur, visionary leader, Kathy Wood, and
Yeah.
they run basically high innovation, high research ETFs. I think they have a robotics ETF and a genomics ETF and an artificial intelligence ETF. So that company, although I don't own any of their funds or anything, I just find them really interesting because I saw today that their year-to-date inflows to that firm have actually outpassed BlackRock, which is insane. BlackRock's one of the biggest ETF issuers in the world, but because of the performance of ARK Invest's funds and their marketing efforts, they've kind of they are outgrowing BlackRock right now, despite maybe having, I don't know, $15 billion in AUM compared to BlackRock's trillions. So that's a firm that I find very interesting and probably worth mentioning at this point.
Yeah, I when I came across it, I thought it was extraordinary because I mean, with most ETFs, there's a bit of a dip here and there. They just seem to go up on this like 45-degree angle, straight up. Gosh, yeah, just minor dips here and there, but mostly it's bouncing above the average 50. Yeah, it's quite extraordinary. Anyway, we're coming up to the weekend. Any plans?
Well, we are kind of on lockdown here right now, so to be honest with you, I have no plans. I'll probably do some programming and do some reading, some take my dog out for a walk, and yeah, it's going to be a pretty staycation weekend, I guess, because we're not really allowed to do too much around these parts right now. What about you, Nicholas?
Very similar, really. Yeah, preparing for the next podcast. Yeah, there's always a bit of that to do. Yeah, and maybe cutting some editing. That is cool. Well, if there's anything else you want to go over, with respect to Passive, and anything you wanted us to think about, or any of the people out there listening might benefit from, do
I guess the only other thing I'd add is if you guys want to check out our software to manage your investment portfolio, our website is passiv.com, passiv.com. There's no E on the end of passive, so it's like it's spelled the German way they spell passive. So check us out there, and if you want a demo or have any questions, you can feel free to just email me directly. My email is nickmccullum@passiv.com.
Good. Okay, and the details will be also in the description notes if anyone's interested. Good. All right, Nick. Well, thanks so much for being on. Have a good weekend.
Yeah, likewise, Nicholas. Thanks for having me.
I was talking just now to Nick McCullum of Passiv. Just before you go, if you're a regular here and enjoy the podcast, please check out my Patreon page at patreon.com/penrakespodcasts. Thanks very much.